Are you working your tail off, paying all the bills, but still feel like you're just stuck on a hamster wheel? Going nowhere fast? What if I told you there's a way out? Not some get-rich-quick fantasy, but a real strategic plan to break that cycle for good. Well, today we're diving into the blueprint from French author Bertrand Roche's book, The Strategic Investor. And that, right there, is the entire point. This isn't about piling up cash just for the sake of it. No, this is about seeing money for what it really is, a tool. It's the key that unlocks a life where you, and only you, are in charge of your time. I mean, really think about it for a second. You trade your precious time for a paycheck, right? And then that money immediately flows out to cover rent, food, bills, and poof, you're right back at square one, waiting for the next payday. It's a loop. That, my friends, is the financial matrix. But the great news? Like any matrix, there's an escape route. And here's the secret. Escaping doesn't mean you have to win the lottery or get lucky. No way. It means you need a map. You need a solid, repeatable plan. And that's exactly what we're breaking down here. A strategic system that's designed to build your wealth for you, even while you're sleeping. Okay, so before we get into the nuts and bolts, a really quick but important point. What we're doing here is exploring an educational system for you to research and think about. I'm not your financial advisor, and this isn't personalized advice. The whole goal is to arm you with knowledge so that you can make smarter, more informed decisions for yourself. You're the pilot of your own financial future. So where do we even begin this journey? Well, it's not by jumping into risky investments. Absolutely not. We start by building a fortress. You have to have a secure financial foundation because you just can't build a skyscraper on quicksand. And the very first step is figuring out exactly what you're aiming for. And that target, it has a name. It's called your freedom value. And look, this isn't some fuzzy, far-off dream. It is a hard, cold number. It's the exact amount of money you need to have invested so that the returns alone can pay for your entire lifestyle forever. That's it. That's the finish line. So how do you find your number? It's actually shockingly simple. Just figure out how much you spend in a typical year, you gotta be honest with yourself, and multiply that number by 25. Boom. That number right there, that's your freedom value. That is your personal target for total financial independence. All right, to start building toward that value, you need structure. So forget throwing all your savings into one big pot. The strategic way is to use 4 separate pockets. First, a pocket for those big annual bills you know are coming, like taxes or car insurance. Second, your emergency fund. That's 3 to 6 months of living expenses, non-negotiable. Third, a project fund for the fun stuff, like a vacation or a new car. And finally, the most important one, your investment fund, which gets fed at least 10% of your income every single time. Now, here's the magic trick that makes this whole thing work: automation. Do not rely on your own willpower. It's a trap. Instead, you set up automatic transfers to fill these pockets on, say, the 5th of every month, right after you get paid. This forces you to pay yourself first. Trust me, it is an absolute game changer. Okay, your fortress is taking shape, your savings are on autopilot. Now it's time to talk about the tools that will actually grow your money. But I need you to remember this. The flashiest tools in the world are totally useless without a disciplined strategy. How you invest is so much more important than what you invest in. Now, since the book is from France, it talks about accounts like the PEA and the CTO. But don't worry about the specific names. Just think of them as examples. In almost every country, you'll find different types of investment accounts. One might give you tax breaks but have a few rules, while another gives you total freedom to invest in anything. The core strategy here is to start with a tax-advantaged account if you can, and then use a more flexible one to fill in the gaps. So how do you decide if an investment is any good? Simple. You run it through the FLIR checklist. It's a super quick filter. First, F for fees. What's this going to cost me? L is for liquidity. How quickly can I get my money back if I need it? The I is for imposition, which is just a fancy way of saying taxation. How much of my profit will the government take? And then, of course, R for risk and R for potential return. Every single investment decision should pass this test. So for most of us, what's the best tool to get started? The answer is almost always a low-cost index fund ETF. Now, why is that? Well, because instead of trying to be a genius and pick the one winning stock out of thousands, you're just buying a tiny little piece of the entire market. It gives you instant diversification, and it costs next to nothing. Okay, let's talk about the one thing that freaks everybody out: market crashes. But here's the thing. A strategic investor doesn't see a crisis and feel fear. They see it and smell opportunity. This section is all about flipping that mental switch and having a battle plan ready for when the market dips, not if.
And the core tactic to get this done is something called dollar cost averaging. Just forget trying to time the market. It's a fool's game. Instead, you invest the exact same amount of money every single month on autopilot. That's it. Sometimes the price will be high, sometimes it'll be low, but over the long haul, it averages out perfectly, and more importantly, it takes all the stress and emotion out of the picture. You need to burn this idea into your brain. Market crashes are not some weird freak accident. They are a normal, predictable part of the game. And if you look at history, every single one has been followed by a recovery that went on to set brand new highs every time. Now, this is how you turn fear into actual profit. It's called the pyramidal reinvestment plan. You keep some cash on the sidelines, ready to deploy. When the market drops, say 10%, you inject a chunk of that cash. If it keeps falling to 20% down, you inject an even bigger chunk. You are systematically buying up valuable assets when they are on a massive discount. So we've talked about the fortress, the tools, the crisis plan. We've covered a lot. But let me be crystal clear. All of this knowledge is completely and totally worthless if you don't do something with it. You have to take action. The system works, but you have to be the one to turn it on. So, I'm going to give you a challenge to get you off the starting block this week. Don't overthink it. Step 1, spend just 1 hour comparing fees on different low-cost brokers. Step 2, open an account. And step 3, buy just €10 or $10, whatever, of a world ETF. Look, the amount is totally irrelevant. The act of actually starting, that is everything. And this is the thought I really want to leave you with. Motivation is fleeting. You feel excited today, but maybe not next week. But discipline, a system that runs on autopilot that you stick with no matter what, that is what will actually carry you all the way to the finish line. So, after all of this, the real question isn't about whether or not this plan works. We know it does. The only question left is, are you ready to start building your own key? Are you ready to start buying back your time, your choices, your freedom? What we've gone through here today is the high-level strategy, the big picture. If you're ready to stop thinking and start doing, the complete A to Z step-by-step action plan is waiting for you right here on our channel. So make sure you hit like on this explainer and subscribe so you do not miss it. And you know what? If any of this has fired you up today, let me know. Drop a comment below with just one word: freedom. Now go get started.